Okay, so you have found the business that you want to buy. Congratulations. This is the first major step in this process. Now it's on to lining up financing for your deal, which you want to take care of as quickly as possible so that you can meet the close deadline for your deal. So in order to do this, you need to find the right SBA lender to work with. Here are some of the things that an SBA lender is going to ask for when they're evaluating your deal. On the personal side, they're going to want to see your last 3 years of personal tax returns, and they're going to want to see the SBA PFS, or personal financial statement. On this document, you are going to outline your whole financial picture, the amount of cash you have in your checking, in your savings, any retirements you have, any assets like real estate that you have, any income that you have. They're going to want to know your credit score, your credit history. Do you have any foreclosures or bankruptcies? Then they're going to want to see your resume to understand your professional experience. This is really important and one of the most key components of an SBA deal. They need to have a high level of confidence in you as an operator. Now, the great news about the SBA program is that SBA lenders are looking for translatable experience. That means you don't necessarily have to have worked in a particular industry to buy a business in that industry, although that certainly helps. Lenders are going to look at your experience and see, do you have skills and knowledge that could transfer into operating this business? On the business side, they're also going to want to see the last 3 years of the business's tax returns. They're going to want to see P&Ls, or profit and loss statements. They're going to want to see a balance sheet and also an overview of the business. What is this business? Who are its customers? What does it do? What does the owner of the business do? And what would you have to do as a new owner stepping in on a day-to-day basis? Tax returns are the most important documents in this process because SBA lenders are underwriting to the tax returns. Sometimes the profit and loss statement, for one reason or another, doesn't totally match up to the tax returns, and that can cause some issues. So it's important when you're evaluating businesses to get those tax returns as soon as possible, because SBA lenders are going to base a lot of that analysis on those documents. So great, you found an SBA lender, you have sent all these docs to them. What are they actually going to do with it? They're going to do a cash flow analysis. So they're going to look at how much money is this business making, what are its expenses, and how much money does it have left over after paying all of these expenses available to pay the debt service, which essentially just means the annual debt payment for the SBA loan. That's one of the biggest questions that they're trying to answer is, what is the DSCR, or debt service coverage ratio? Essentially what that means is, how much ability does this business have based on its cash flow in order to pay this loan back? They're not just looking at this information in the current year. They're typically doing a 3-year look back, meaning they want to look back into the history of this business and see how successful has it been over the last few years. Over the last few years, would this business support this debt payment? That's because the best predictor of future success is past success. SBA lenders want to arrive at a high degree of confidence that you're going to be able to pay this loan back. So if a business has the historical cash flow over the last few years to support this debt payment, there's a much greater chance it's going to move forward in the same way, it's going to continue being successful, and you're going to have a very high rate of being able to pay this loan back, growing your business, and being a successful operator. They're also going to look at the global debt service coverage ratio. So they're going to say, how much debt do you have? How much debt do you owe on your home, on student loans, on credit cards? And they want to make sure that the overall financial picture makes sense. SBA is story lending. I know it might seem like a black and white, cut and dry government thing, but the story of the deal is so important. Do you make sense as the operator? Does your financial picture make sense for this deal? Does the financial picture of the business make sense? So they want to make sure that the whole story fits together. If they take a look at these initial documents and they like you and like your deal, they're going to issue you a term sheet. A term sheet is an initial document in the SBA process that outlines what a particular lender is interested in offering you. It's going to tell you how much money they'll give you for the purchase of the business, how much working working capital, or essentially money for day-to-day operations they're willing to give you, how much your closing costs are going to be, and if there's an SBA guarantee fee involved, how much that guarantee fee is going to be. The term sheet is also going to outline your rates. Prime for a while has been at 8.5. SBA loans are based on the prime rate, and most of the SBA loans I see going out these days are somewhere between 2 to 3 points plus prime. Most SBA loans are variable adjusted quarterly. So that means if you got an SBA loan today for 8.5, which is the current prime rate, plus 2, your loan would be at a 10.5 interest rate, but next quarter it's going to be reevaluated. So if prime next quarter goes down to 8 points, your loan is still going to be prime plus 2%. Your loan goes down to 10%. So the term sheet is going to outline how much money you can get for this project. It's also going to tell you how much money you need to put in. Typically, borrowers are expected to bring 10% of the total project costs to the table. It's going to tell you your rate. It's going to tell you your amortization. Most SBA deals without real estate involved are on a 10-year amortization. It's going to tell you your monthly payment. And then it's also going to let you know the deposit you need to pay to move forward. So most of the times when you sign a term sheet, you say, great, I want to work with this lender. You're going to need to put down a deposit to show you are serious about moving forward with this lender. Deposit amounts can range. You might have a $2,500 or a $5,000 or a $10,000 deposit, depending on the size of the loan. You're going to pay this deposit and then move forward into the underwriting process. The underwriting process is going to go into a lot of detail. It can seem like a pain in the butt, but I actually think the SBA underwriting process is your friend. This is because buying a business is a risk. I think it's a much lower risk than starting a business, but it's still a big investment. It's probably one of the biggest investments you're going to make in your life, and you want to make sure you're doing it right and you're doing it thoughtfully. So the great news about the SBA process is you are going to have multiple professionals who spend all day doing this, looking very carefully at your deal. And ultimately, the question they're trying to answer is, what is the likelihood we are going to get paid back for this loan? They're only going to issue you the loan if they come to a very high degree of confidence that they're going to get paid back. And that means they'll have a very high degree of confidence in your ability to operate this business. So again, they're looking at the whole story. They're looking at your experience. Do you make sense as an operator for this business? They're looking at your personal financials. Is your cash flow going to be too tight? Are you going to be able to pay the monthly expenses for you and your family and also pay back this debt? So they need to get comfortable with the debt service coverage ratio. They need to get comfortable with you and the deal overall. The underwriting process can vary. You're probably looking at 30 to 45 days for a typical size SBA loan that doesn't include real estate. Then once you've gone through the underwriting process, you're going to get a commitment letter. This is a big deal. This means the lender has said, hey, we've taken a very close look at this. We want to give you this loan. You are approved. The lender's going to ask for some final documentation. They're going to want to see that you have a business entity, like an LLC set up. They're going to want to see your EIN or your employer identification number. They're going to want to see that you have a business bank account set up. They're going to want to make sure you have everything in place to close on this deal and start operating your business as soon as you're funded. So after the closing process, then you reach your funding day. That's the day the lender issues out the funds and you officially own your business. Congratulations, this is a huge day, and now you're gonna get down to operating. As I've said, I'm an SBA loan broker, and my job is to help you find the right lender for your deal. Especially if you're a first-time business buyer, finding the right lender can be a lengthy process, and you don't want to find a lender who's unlikely to close on the deal. Here's the thing. Time kills deals. Oftentimes, when you submit an LOI or a letter of intent to a seller, which is your offer to say, hey, I want to buy this business, and you both sign it, you have a close date in mind. The seller is expecting you to be able to execute. They're expecting you to be able to line up financing and get this deal done. If you're spending weeks shopping for lenders, trying to find the best fit, you can waste valuable time. The work I do with clients is getting to know them, getting to know the particular deal that they are working on, and finding the lender who's going to be the best fit and the most likely to execute. So if you've got a business that you're interested in buying, let's have a conversation and see what SBA loan options are on the table for you.